6 states right now, Florida, Georgia, Indiana, North Dakota, Wyoming, and Texas, are all actively passing laws to cut property taxes to zero. Here's the reality. Most people run a simplified tax calculation when they consider a move. Income tax. Does the new state have it? Most people know that Florida doesn't. What most people don't know is that the property tax comparison between where they are and where they're going is equally as significant. And right now, that gap is about to get much wider. And here is what most people watching this have not considered yet. Your $10,000 property tax bill could legally become zero. I'm going to break all this down in this video, including specific proposals, actual timelines, and the number nobody talks about. What staying in your state actually costs you over 10 years versus making a move. Because that number for most of you watching this is somewhere between $100,000 and $200,000. And I'm going to show you exactly where it comes from. Here is exactly how close Florida actually is to making that happen. This is the one that has moved the furthest and the fastest. Let me give you some context before we go state by state, because there are two things that most coverage of this topic gets wrong. First, these are not fringe proposals. They are passing legislation. The Florida House bill passed with nearly 80 votes in February 2026. Indiana's HB 1288, which would abolish property taxes entirely after 2027, has passed the Indiana House. North Dakota's governor has already used oil money to fund and eliminate the property taxes for nearly 50,000 households and is publicly committed to a full elimination within a decade. Second, most of the coverage of this story treats it as news for existing homeowners, people who already live in these states and want their bills cut. That completely misses the most important angle for anyone watching from a high tax state. What this actually is a fundamental shift in the financial calculation for interstate relocation. The states that most aggressively are cutting property taxes are overwhelmingly the states that people have been moving to for the past 5 years. And the states that people are leaving are not doing this. On February 19th, 2026, the Florida House passed HJR 203 by a vote of 80 to 30. The bill would place a constitutional amendment on the November 2026 ballot to eliminate all but school-related property taxes on homesteaded properties starting January 1st, 2027. The regular session ended March 13th without the Senate acting, but the Senate president ended the session with direct public commitment. Lawmakers are coming back in a special session in mid-April specifically to put a property tax reduction amendment on the November ballot. His exact words are, "Affordability is top of mind for Florida families. Senators will return to put a meaningful option for property tax relief on the ballot." This is not a bill dying. This is a negotiation moving to the next round. Here's what the data shows for Palm Beach County specifically. Eliminating homesteaded property taxes would represent a $899 million revenue loss for Palm Beach County alone. That tells you the scale of what's going on. And independent analysis estimates that if this passes, Florida home values could increase between 4.5% and 9% because the carrying cost of ownership drops meaningfully overnight. Governor DeSantis has said this publicly. If you're a Florida resident and you have a primary residence here, you should be able to own that free and clear of the government. Now, before we move on, here is something worth sitting with. The state that you're leaving right now is potentially not doing any of this. It might be going in the opposite direction. If you're watching this from New York, New Jersey, or California, and you're already doing the math on your own situation right now, and you don't want to have to wait until you're on the plane flying down here to have a real conversation, give me a call anytime. My number is below and in the description. I'll walk you through exactly where your budget lands and what the carrying cost picture looks like for you before you ever even get on a plane and come down. All right, let's keep going. Republican lawmakers in the Georgia House have proposed phasing out homeowner property taxes entirely by 2032. The plan starts with a $1 billion state investment to reduce current taxes immediately and phase the primary resident homestead exemption in 3 steps. A $10,000 exemption from 2026 to 2028, a $30,000 exemption from 2029 to 2030, and a $60,000 exemption from 2031 and beyond. The Georgia House and Senate are currently in a standoff over how aggressively to move this forward. Georgia is one of the fastest growing relocation destinations in the Southeast, and this proposal is designed to accelerate that trend. Indiana's HB 1288 would abolish property taxes on tangible property after 2027. Indiana already passed a separate $1.2 billion property tax relief package with annual credits of up to $300 directly going towards homeowners between 2026 and 2028. The state is running two tracks simultaneously: independent relief now, while elimination is still on the table. The trade-off being debated is replacing property tax revenue with expanded sales taxes. But for a homeowner relocating from New Jersey, where both property taxes and income taxes are substantial, the Indiana direction is still dramatically better math. Did you know that 50,000 households in America already pay zero in property taxes? North Dakota got there first, and here is exactly how they did it. North Dakota is a proof of concept state, one that shows that full property tax elimination is not just a talking point. Governor Kelly Armstrong expanded the state's primary residence tax credit to $1,600 per year. That credit has already wiped out property taxes entirely for 50,000 North Dakota households and reduced them significantly for nearly 100,000 more. Armstrong's stated goal is full elimination for most homeowners within a decade, funded by the state's oil tax savings account. So here we're seeing a state that's done this. The mechanism exists. Other states are studying the model. 50,000 households in America already live it. Wyoming is taking a different path. A bill to eliminate property taxes entirely failed in the Wyoming legislature 7-24. But a ballot initiative to cut property taxes by 50% is on track for the November 2026 vote. Wyoming's Legislative Services Office estimates a full elimination would cost local governments $644 million per year, which is why the full elimination push stalled. The debate in Wyoming is about the mechanism, not the direction. Texas Governor Greg Abbott is pushing for the elimination of school property taxes, the largest single component of a Texas homeowner's property tax bill. Texas already passed multiple waves of relief: rate compression, homestead exemption increases, and the Senate bills 4 through 23, which would raise the senior exemption as high as $200,000. Combined with the existing senior tax freeze, the package could effectively zero out the school portion of property taxes for Texas seniors entirely. The mechanism is using state budget surpluses to buy down school property taxes over time. Abbott has said he wants to take it to zero. Now I want to show you something. Most people making a relocation decision have never actually run this number. They think about income tax, they think about the cost of the home, maybe the cost of living, but they don't think about this. Take a multi-million-dollar home. Property taxes only over 10 years. Let's go state by state. New Jersey has an effective tax rate of 2.23%. That's $22,300 a year, and over 10 years, that's $223,000 gone to the government just to keep your home that you already own. Connecticut has a tax rate of 1.92%. That's $19,200 a year or $192,000 over a decade. New York has a tax rate of 1.73%, which is $17,300 a year and a grand total of $173,000 over a decade. And finally, in California, the rate is 1.1%, $11,000 a year or $110,000 over 10 years. Now watch what happens when you cross the Florida state line. Florida today has an effective rate of 0.76%. That's $7,600 a year and $76,000 over 10 years. That's already a $147,000 difference between New Jersey, and that's before you count a single dollar of income tax savings. And if the ballot passes this November, it moves to 0.17%, under $2,000 a year, under $20,000 over 10 years. That's a $200,000 difference versus New Jersey on the same $1 million home just by changing your zip code. A homeowner leaving New Jersey with a $1 million home moving to Palm Beach County today, that saves you $14,700 per year in property taxes alone. Over the next 10 years, it's $147,000 cumulative savings before a single dollar of income tax savings is counted. If the Florida ballot measure passes, that 10-year figure climbs past $200,000. And that calculation doesn't include Florida's existing homestead exemption, which is up to $50,000 off of your assessed value, or the Save Our Homes cap, which limits annual assessment increases to 3% or CPI, whichever is lower for homesteaded properties. For a buyer who locks that in today, the cap starts accumulating immediately. Every year you wait is another year that the cap doesn't work for you. Most people don't run this math. The numbers tell a different story than the one that most people have in their head when they're sitting in New Jersey paying their property tax bill. $14,700 every single year. That's a car payment, 2 round-trip flights a month, a college fund contribution, going to the state instead of to your family, forever, until you change the equation. So here are 3 things that you need to do before November 2026. What you need to understand is that people who move first know something that people who wait don't, and the difference is costing people money in 2 directions. Let's make this actionable. Here's how I think about this decision based on what I see from my clients every month. Group 1 is people who wait too long. Those who hold off until the ballot measures either pass or fail before making a decision are at the risk of home values increasing 4.5 to 9% as the carrying cost of homeownership drops. That appreciation goes to the buyers who are already in the market. The buyers who are in Palm Beach County before that vote own the upside. The buyers who wait to see what happens pay a higher entry price either way, because the values rose if passed, or because the national conversation about Florida reignited another wave of inbound demand if it failed. Group 2 are people who discount the probability. There also may be those who don't factor it into the planning at all. Current polling suggests 49% support against a 60% threshold. That's not a sure thing, but it is a bill that cleared the Florida House with 80 votes in a national environment where 6 states are pushing the same direction simultaneously. Assigning this 0 probability is not sound financial planning. Here's the question worth asking yourself right now. If your property tax bill legally went to 0, what would you do with the extra money? Reinvest it, pay down principal, fund your kids' college? That is not a hypothetical anymore. It's a real live vote this November, and the window to buy before that closes in months. Even if the Florida ballot measure does not pass this November 2026, the floor of Florida's property tax advantage versus New Jersey, New York, and Connecticut does not change. You are still saving $9,700 to $14,700 per year on property taxes, still paying 0 state income tax. The threshold exemption and Save Our Homes cap still apply. 6 states push that number even higher, but even today, the math already wins. Some good questions to ask are, where specifically does your budget go the furthest? How do you time your homestead filing to maximize the Save Our Homes cap? And what does your actual 10-year carrying cost model look like? Those are great questions, and the answers are specific to your situation. The people who buy in Palm Beach County before the November vote own the upside if it passes. The people who wait to see what happens pay a higher entry price either way. Values rise if it passes, demand surges if the national conversation reignites. There is no scenario where waiting costs nothing. Here's the bottom line. Most people making this relocation decision are doing it with incomplete financial information because they know about income taxes, but they don't know the full property tax picture, the homestead exemption mechanics, and the Save Our Homes cap, or how close to the Florida ballot the proposal actually is. If you want to run the actual numbers for your situation, your current home value, your income, your target price range, that's exactly the conversation that I have on a market clarity call. And if you're a professional, a CPA, an estate attorney, a financial planner who works with clients evaluating this move, I work with a referral network of advisors across the Northeast and California who want a trusted resource locally. I run this specific analysis for their clients. My contact info is linked below. Most of my clients from the Northeast came down thinking this is an income tax story, and it is. But the property tax compounding model is where the real 10-year number lives, and almost nobody has run it before they call me. So that's the conversation that I want to have with you. Make sure to subscribe for more specific, current, data-driven content on Palm Beach County and beyond. If you found this insightful, hit that like button. It helps other people find this video. Also, make sure you watch the South Florida housing market update for 2026, and I'll link it right here. I'm Joel Poulin, your Palm Beach real estate broker, and I'll see you in the next video.